The best time to sell your business. We're often asked the question as we're speaking to prospective clients as, when is the best time to sell my business? When should I start thinking about it? How should I go about it? What are the primary considerations when contemplating an exit for something that people have oftentimes worked, if not years, decades on building and developing? And so the two concepts for today's videos are what we call seasons of life and what we call economic cycles. And it's the overlaying of these two concepts that oftentimes is best indicator of when a company should properly pursue these objectives. So when we think of the different stages of life, there are different seasons. There's the development, there's the extraction or cash flowing of a situation, and then there's perhaps the more passive running or operating of a company. And so you tend to see on the front end of a business, they're fighting to get a foothold, to start building and developing. You'll then see a part where that pivots a bit towards more steady and consistent cash flow generation of the business while still expanding, whether it's into markets, new services, offerings, products, etc. And then you'll see a period in time where there's a lot of delegation of activities and responsibilities and where ownership is a bit more of kind of that chairperson type of role. And so oftentimes we say the best time or the life cycle of a business is when that obsession of growth, if you will, starts to wane a bit. And it's not a negative thing, it's just the way that some of these businesses tend to naturally progress. And so I mentioned it in a podcast fairly recently, but there's this idea of the edge of discomfort. And so I forget what author said it, but in growing a business, in evolving a business, you kind of grow to a point of constraint, in a point of discomfort, in a point where something needs to change, something needs to evolve, something needs to progress. And it's only in making some of those painful decisions or taking certain risks that the growth is then able to expand therefrom. And so you have this kind of undulating business of growing to pain points, perhaps contracting a touch, but then growing beyond those pain points to the next pain point. And it just evolves and evolves. And there's not necessarily an end point. It's just one mountain to climb after another. And so we say that if you reach a pain point in a business, if you reach a point of constraint where there's just not the desire or obsession to get beyond that next pain point, it's a good time to contemplate, hey, maybe this is the best time to kind of transition a business. And the reason we say this, and again, kind of going back to that same podcast, was businesses are living things. We always joke that they age like milk or they age like wine. And there is the potential to hold on to something too long. There is the potential to have a business that's consistently cash flowing, however, not pushing beyond those pain points, whereas there might be other competitors or upstarts in a particular industry that do. And once they reach kind of a similar standing, it can have an impairment or a negative impact on the value of your business. So that's the idea of life cycle, and starting to think about at what point is the business best situated to transition to new ownership. And an equity stake in that business can be retained. There's still ways of staying involved with the business while not having to endure all of the risk, while being able to monetize or take some chips off the table is the phrase that you'll hear, and most optimally situating the business for its next chapter. And so the second consideration, or the second primary pillar, is economic cycles. And as we're seeing now, there's these 7 to 12 year cycles, and it's happened over and over and over again, and it will continue to. And I think there's a good Ray Dalio video on YouTube explaining why. It has to do with credit cycles and risk taking, but the general consensus is that you will see ups and downs as the economy generally trickles up. So the regression line or the trend line will always kind of go up at a certain rate. However, amongst that rate, it will oscillate up and down. And therefore, there are times where markets tend to be frothier than others. And you'll see this most explicitly perceived in, let's call it, the very early stage businesses or the very large publicly traded companies, where that valuation oscillation or the availability of capital can really be night and day. Now, the nice thing about the businesses that we focus on, so again, $400,000 to $4 million EBITDA businesses roughly, in our space, it's far more insulated, it's far more driven by the fundamentals of the business, and therefore the multiples paid for these businesses, or the implied multiples when it comes to a financing, tends to oscillate less, or the dispersion, if you will, of data points at any point given in an economic cycle tends to be less, and therefore it does change to a bit. And so you may see a business that trades for 6 times EBITDA trade for 7 times during a high point, or trade for 5.5 times during a low point, but generally speaking it stays fairly consistent. However, in the grand scheme of contemplating is now a good time to exit a business or sell your business, you want to overlay the life season with the economic cycle. And if you can time those two out well, it works great. And what I will say also in terms of the economic cycles is there's certain seasonality and certain supply and demand for different industries within these economic cycles. So although you could see a slowdown in perhaps the retail consumption of chocolate bars during a downtown, the commercial or industrial demand for, say, clean room supplies that go into pharmaceuticals or immunotherapies that are more tried and true and less on the VC end could still be very strong. So there's a little bit more granularity that we won't get into in this video. However, the general concept is seasons in life, economic cycles. When you layer those two over one another, that's the best contemplation of, is it a good time to sell the business now, or is this something that should be more fully contemplated down the track? And so just some food for thought. We'll dig in further into detail on this in future videos, but it's a question that comes up all the time. To a degree, there's a bit of art and science that goes into the contemplation of this, but these are at least two kind of the primary pillars to consider as you contemplate these potential Robert Frost fork in the road situations. And so that's a thought for today. Hope the week continues to go well for everyone. Keep pushing forward. God bless. We'll see everyone next time.